Good evening, good afternoon, everybody. It's been a while since I was able to record one of my takes, and I've been, of course, consistently in the markets monitoring what's been going on lately, and we're just gonna jump into where I've been at currently, some of the trades that I took this week, and what I will be looking out for the week ahead, or for the remainder of this week, that matter. So first off, really the only trade I took this week, which was a good trade, was the trade in GA, which I took a short position from last Thursday, that had me right here at this dotted line, and it pretty much filled out Monday night into all the way in through Monday. I closed at Monday close down here at the 1414, which was for about 210 pips, which was a pretty solid trade for 1 or 2 days, which was pretty good. So we're gonna be moving on to the next trade that I'm in currently. There's a lot of technicals that suggested this short. As you can see, it was a high probability trade, in my opinion, and we pretty much just needed the right amount of market formula to execute, and everything that fits my trading plan was met. So I took the trade, and it was a winning trade. So moving on. All right. So today we are currently short dollar Swiss. I actually had anticipations in taking this trade earlier last week, which most of the technicals are already completed. I just need to follow suit and reconfirm an entry. Some other things came along, and I missed where I was originally were supposed to enter, which was at this blue line here. And I ended up re-entering a day later, or a week later actually, on the next weekly candle that suggested that there will be more bearish activity. So I entered on that on one of the day at the beginning of the new weekly candle, the new daily candle of that week, and so far 35 pips or so, just about, and we'll see how this trade fans out. The targets are set for the 50, or actually the 618. Targets are set for the 50, but we also have the 618 here, so we'll see how it reacts to the 618, and then we will definitely be taking profits off at the 50. But this could be a pullback for an extended move. I'm not sure. It doesn't really look like it, but we'll see, and make sure that no market sentiment changes during this trade. We're already at break even, so it's a stress-free trade really at the moment. On the lower time frame, we see a little pullback, but we have a long wick to fill down here. With a wick this long, I highly doubt that this would reverse right here. The market just doesn't move like that. I'm sure this candle might have just opened a bit ago, this 4-hour candle, and this is why it opened up here. This 4-hour candle will close somewhere midst of this wick somewhere. Let's move on to our trading potentials. Those were only the 2 trades I've taken this week. I've already closed my GA trade. It hit targets. This dollar Swiss trade hasn't met targets yet, but we do have a set of targets here at the 618. It has a reaction to this level for some reason, and starts to reverse. We got to pay attention because the dollar has been quite bullish this week, so we'll pay great attention to that. And that's the dollar Swiss trade. We'll wait and see how this goes on. All right. What we're looking at here is dollar yen, UJ. UJ is at what we would describe as a monthly trend line. this may very well be the annual trend line as well, but we'll call it a monthly trend line. And yeah, this may be the annual. Yep, so this is definitely what I would describe as an annual trend line, or a trend line that it meets every every time throughout the year, once throughout the year, every year, and or every year since 2015. Every time it's met this trend line, it's had a rejection. So I call it an annual trend line, just for that reason. It's a strong trend line, and it could very well react to this trend as well. So we're pulling back up into that region. I think there's a little bit more nudging room to go. I wouldn't be so quick to hop on the short here, because we still got this little gap here. You know, we could push up a little bit further. So you might want to check for something in here. But if this is the rejection, I would probably try to confirm it on the next daily candle, because you don't want to enter too early, and then you're going to spend a day or two in a drawdown, you know, and you might not, you know, some people are not able to hold on through that time. So the best risk reward is actually in this square here. We can make it the hair bigger. Would actually be here. Is really where you want to be for the best risk reward, because then you can get your stops right on the outside of this trend, outside of this protection, and then you'll really be able to confirm, you know, where price is going from that point. But I don't know, it just doesn't really seem absolute yet, since this wick definitely tested a little bit higher by a few pips. See the body of this close. Let's get a little closer. The daily of this closed yesterday, so that was 21st. Daily of this tested here, so that's still 36 pips of upward potential that this still has. So whatever, so you would have to be able to hold down. I'll draw down your count of 36 pips. Has it come up here? So I would wait. It's not really confirming that. But this candle is a doji, or a spinning top. No, this is a doji. So the doji candle usually does suggest possible reversals. It's good to pay attention to the candles. But it could create this doji and then fill this wick on the next daily. Like, for instance, like doji, didn't really, you know, these upward moves, so that we could doji here and then have another upward move and fill this candle wick from the day before. So it's still always important to realize when the trend hasn't quite completed yet. We need more confirmation in order to say that this is a full hour reversal. I probably wouldn't trade something like this right now, because the probability is still kind of high for it to still go up. So that's kind of really wouldn't be my forte, so to speak. If oil could run off the map, it would. Honestly, the bull rally out of oil is quite exquisite, so to speak. It's definitely not slowing in pace for any reason, but it is getting a little what I would describe as a little sloppy. I think it's pretty consistent, but it's gonna start getting a little sloppy. I see a little bit of weakness growing in over here. It's gonna start chopping up a little bit, but for right now it looks fairly consistent. There's no really any places for entry, or I wouldn't have an interest in trading it right now. But we definitely caught some big swings in this earlier in the year, so it's still going up. Very interesting. So that's oil. Alrighty, in the U.S. major equity, the S&P 500. See, well, I was suggesting bullish sentiment. since last week, and that is really what's being described here on the price. But there's no follow through, and since this is a fundamentally driven asset for stocks, it could have some speculative interest. You got to be careful when deciding, especially during these volatile times like this, when you're going to take a position and for where the target may be. I think a lot of people are taking long positions here with the idea of this to break these highs, but today it's under a little bit of pause, which is okay. So definitely we'll be paying attention to see where this ends up. I'm not quite sure yet, so I'm not trading it, and it hasn't come back and retested the breakout. So it could, we don't know yet, it could break out and just keep going, which would be remarkable, but that's not always the case. So we just have to play the waiting game. We got to be patient, we got to be sure. So we'll hang out and we'll wait. Alrighty, so that's Kyle, the chief strategist over at FXU and active manager, giving you a little market rundown. I'll be back to talk about some more trading ideas, some market potentials and things that I'll be looking out for. I actually have a big eye on the peso coming up for a London session this evening. Maybe I'll get back on and run through that, and we'll keep in touch on this. Thank you guys for participating, and see you soon.